Production figures falling, missing expectations, and we're seeing this move lower in the stock price despite the fact, actually it's up higher now, up just about 2%. Maybe some of that has to do with the fact that deliveries did exceed expectations. I'm curious, Ron, what your view is of Lucid at this point, given the fact that we're still trading just above $3 a share. What is it going to take in order to really see that catalyst here to the upside?
Yeah, I think Lucid has some catalysts on the horizon in terms of the Gravity launch, which does unlock some TAM, but we've seen that the high-end electric SUV market is not as big as I think investors would have expected a few years ago. We've seen Rivian's sales kind of stall out here, as well as Tesla's Model S and X sales. So I think that until we get to the mass market car, which for Lucid is 2026 and beyond, it's kind of, there is a lack of catalyst to really drive growth and see that step function change improvement in unit economics and profitability, which is tough for investors to underwrite. We've seen the same pressure on Rivian, which we're buy rated on. Just that this view that until 2026, there's no real catalyst to change EV demand if you don't have a mass market product.
For Rivian, it seemed like there was a manufacturing issue that they were needing to work through. For Lucid, is there any more clarity that investors are getting about how much they're outputting and their manufacturing practices in order to ramp up towards that mass market vehicle eventually once we hit 2026?
Yeah, Rivian did have a manufacturing issue, but ultimately we think kind of all EV makers at this point are demand constrained, not supply constrained. Rivian did have some shortages on the commercial van and their enduro motors for the R1S and R1T, but even without those, EV makers are largely demand constrained at these levels. So I think that we don't really see a catalyst for a step function change improvement in demand over the next 12 to 18 months. I mean, people have made a case about interest rates. Historically, interest rates don't really have a major impact on new vehicle sales. Maybe it's different for electric vehicle buyers because demographics, they do skew materially younger. So you can think of a cohort that probably has less equity to put in the car or less down payment equity. But otherwise, it's really tough to see a demand shift in EV adoption in the next 12 to 18 months. Long term, we're super bullish on the space, but I think it's still a challenging 12 to 18 months here.
All right, Ron Yevsikov, thanks so much for joining us here this morning, Director of Automotive Equity Research at Guggenheim Securities.